Now guys, stocks and crypto alike are performing very well right now. And I believe it's because what the Federal Reserve Jerome Powell said today. No, he didn't destroy the markets, but I also don't believe he said anything, one, that we didn't already know, and two, anything that we could reasonably rely upon going forward as solid evidence of a recovery or solid evidence that things are or will be getting better. So I want to break down a little bit of what Jerome Powell said today, why we're seeing crypto bounce right now, why the stock market was going up, and why people are interpreting this as good news. So if it sounds like something you're interested in, let's get started. What's up everybody, I'm Clay. I'm here to make 2022 the best year ever. If you haven't clicked that subscribe button, make sure to subscribe to the channel, join us, become a bro. We are here every single day and we are growing our portfolios together. And look, if you're brand new to investing, you don't know how or where to buy stocks and crypto, you got a link in the description below for Webull. Super simple to set up your account. Any deposit, you're gonna get 6 free stocks right now. $1 crypto trade, you get $5 in free crypto. And then if you guys want a crypto exclusive exchange, you get Voyager down there in the description. You're gonna get $50 in Bitcoin just for signing up. And they do have excellent passive income, up to 12+% just for holding your cryptocurrency on their platform. And guys, listen, I don't think that this was the bottom. I don't think that this was the last dip, but with the reaction we had today, things are looking up, at least for the short term. So let's talk about why it might be the short term as opposed to the long term. And we really have to look at why cryptocurrency is reacting today. And it's reacting because of Federal Reserve Chair Jerome Powell speaking and talking about forward guidance and the interest rate increase. Now, I'm sure a lot of you guys have already seen, if not, interest rates increased by 75 basis points. That is 0.75%. And this was the largest rate increase since 1994. I mean, we're in some drastic times right now. That we are seeing things happen that we haven't seen happen in the last roughly 30 years. So knowing that we're going into these uncharted territories, we could be up against more than we expect, and I think that that's what we're headed for. Jerome Powell, they raised interest rates by 0.75%, and he says that he does not expect, I don't understand how you can't expect a recession at this point, but he does not expect a prolonged recession, if any. So let's talk about that, guys. A recession happens when you have 2 consecutive periods where GDP decreases. So what they are projecting is that we will have an increase in GDP during the second quarter. Personally, I highly doubt that we see that, but that is one of the minor focuses of the Federal Reserve at this point. The stock market is a minor focus of the Federal Reserve. They don't care about people's retirements. They don't care about people's investments and their savings. And the crypto market is not a focus of the Federal Reserve, okay? So they don't care how much money people are losing and the fact that when they open their mouth, stock prices, crypto prices, and so on get affected. Now, what they do care about is unemployment and the labor situation. Jerome Powell made it very clear that their main focus is making sure we have people working. Now, the good news is unemployment is at very low levels right now. I believe the unemployment rate is below 4%. I think it was like 3.7 or so, in the mid to upper threes there. And it is set to slowly rise. Now, why is it set to slowly rise based on increasing interest rates? Because unfortunately, if businesses can't borrow money for the same rate, they're not going to swallow those, I guess, losses themselves. They will be leaning down and cutting employment. So Jerome Powell does expect the unemployment number to go up, but I think we know that the unemployment number is already artificially low because of the amount of people that are unwilling to work. You guys can drive down any road in America and see help wanted signs in every single business that lines the street. You know, when you walk into a restaurant and they are understaffed, that unemployment is not as well off as a lot of people say that it is. So we know these numbers are already artificially low, but that's what they point to as an optimism point. Look here, this looks good. It might not be good, but it looks good. And the Federal Reserve is doing this in many different areas, but labor is their go-to. Now, What they also said is that they will remain aggressive and they will continue to raise interest rates, potentially at those 75 basis point levels, if that is what's necessary to wrangle in inflation. Well, here's what we know so far. It didn't work when they raised in interest rates at the last meeting, and we're still unexpectedly rising. Inflation is still unexpectedly rising. So what we're doing right now is trailing behind it, saying, stop, 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 slow down, slow down, slow down. And it's not. It's just out ahead of us running. And unfortunately, the alternative is to get out ahead of it by raising interest rates at 1%, 1.25%, 1.5%, something extremely drastic to shock the market, potentially into a recession, yes, but to calm inflation down. And at that point, it becomes a battle. It becomes a decision. Do you want businesses to potentially, slow down growth? Do you want people to not spend? Do you want an economic recession where less money trades hands? Or do you want to go to the gas pump and pay $10 a gallon, $11 a gallon, $12 a gallon? Do you want to go to the grocery store and buy steak that is $20, $30, and I'm not talking about filet mignon. I'm not talking about those crazy marbles that they got out there. I'm talking about a sirloin that costs $20, $30, $40 a pound. You want to buy ground beef for $15 a pound? The answer is no. And what Jerome Powell blames all of that on is stuff that is out of their hands. So what they can control is the interest rates, but what is out of their hands may allow, inflation to continue running wild. And that's where it gets dangerous. This deflection. Jerome Powell deflecting responsibility onto things like Russia and Ukraine. Russia and Ukraine driving energy prices higher. Well, you know what is in our control? The amount of money that we spend on the Russia-Ukraine situation. You know what is in our control? The sanctions that we have imposed on Russia and all of these countries that are in bed with Russia. They blame it on supply chain issues going on in China. You know what is within our control? Supply chain here in the United States. U.S. manufacturing, U.S. goods and services. But hey, we would rather blame it on something else and shift that elsewhere. You know what is in our control? Protecting food processing plants, protecting these people that provide for our country, but yet mysteriously, they're all going up in flames. So what I see is a little bit of smoke and mirrors in places where the Federal Reserve is likely showing us and likely saying, hey, look here, this looks good. Let us deal with this problem over here. Don't worry about it. So, it does sound nice when the guy gets up there in front of people and talks, and cryptocurrency responds positively. Stocks responded positively today. A lot of people had a little bit of hope, but we do still have some rough times ahead of us unless these issues, like the supply chain issue and Russia, Ukraine, and inflation and so on, unless they actually get resolved. So that's what we need to look for if we're trying to time a bottom. What we have is a little bit of optimism. What we have is a little bit of hope, but we don't have a decrease in interest rates yet. We don't have a decrease in inflation yet. We don't have supply chains that are well-oiled machines. We have a lot to deal with. Now, guys, I want to know what you think, though, because the market clearly reacted positively, but I guess it's a sentiment-driven drive where people saw a little hope and they decided to buy in. Let me know your guys' thoughts down in the comments below, whether or not this bounce is here to stay or that was just, what they call a dead cat bounce, and we're going to see a continued breakdown to the downside here pretty soon. If this button right here is still red, make sure to click it, subscribe to the channel, join us, become a bro. We are here every single day. We are growing our portfolios together. Claybro883 on Twitter and Instagram. You're getting 6 free stocks on Webull, $50 on Voyager, and until the next time, hope that each and every one of you have an awesome day.